All right, investors, this is Andreas from Portfolio 123, and I got a question via my blog about how to build robust systems, and let's dig into that. So let's just create one here. We go to simulated strategies, and then we go to stock. All right, so let's say video robustness, bust. All right, I'm going to take this ranking system here, small market cap focus, and we're building a small cap strategy. So here we go. And the universe, I'm going to 10 mil. You won't have that, but that's easy to replicate. I'll show it in a minute. So let's just take this one here. And sell would be, let's say 90 or so. And everything else I'll leave it how it is. So let's just do this year. Let's just do whatever, 10 years. Okay. Let me just see. Rank pause. Let's say rank pause above 100. That takes basically the rank position instead of the rank in percent. So that looks really beautiful, right? Already. And why do I think this is a good design? So let's just go here. We don't have any buy rules. We have only one rank-based sell rule. So while I'm using buy and sell rules, other formulas, there I'm careful. I live by the rule like 3 to 5 buy and sell rules max. And if I see something like this, where it only has like again one sell rule on it, and it just works with a ranking system, you have a strong indication into the direction of robustness. So the most strategies where users come to me and say, "Hey, this looked great in the test, but now it's failing out of sample." The most stuff I see that fails in the future, it has like 25 buy and sell rules or something like that. There you make a lot of assumptions about the distribution of the data, and it's not. So whatever, if I say price earnings, right? Price earnings, whatever. If I do something like this, I make a huge assumption about the data. Because price earnings, they're influenced by interest rates, they're influenced by a ton of other stuff, and this is a strong assumption about the data. And a ranking system, what I could do is basically put this into a ranking system and say lower is better. That's fine. That's okay. But something like that is simply a too much. And if I have like 25 rules of that, then I'm starting to curve it basically, right? So it would be okay to say, something like net profit above whatever, right? Net profit, net profit. What is this? Net profit margin. That's actually not what I'm looking for, but it doesn't matter. Something like that. Net profit margin above 0. Right? That is okay because I don't make a huge assumption. If I make something like that, the assumption gets really huge. That's not a good thing. So be careful of buy and sell. That's the first rule in terms of robustness. If you see something like this, right, only one sell rule, that's fine. That's a very good indication that you're onto something. Same thing basically with the slippage. Always put the slippage in here. If you see something like this, that would be kind of the extreme. And it only works like this, then you don't have anything. So go to a variable slippage and then go to next, high, low, and 2 times lowest. That's really important. Here's the slippage assumption. So it's an easy, or it's not super sophisticated, but it's doing its job. So basically, stocks that have below 50K liquidity, dollar 10-day average, get a penalty of 5% at the buy and at the sell point, right? So this is important. Now, okay, let's run it again. So in general, now we have a very robust design. And again, I'm not saying that it's not allowed to put other buy rules or other sell rules in there. I'm just saying you're starting to make the strategy complex, and complexity is not feeding into robustness. All right. So, if you're just starting out, I would start out like this, right? And I would just work with a ranking system, because then you're really on the safe side, or the safest side you can be, right? Now let's go to the ranking system. All right, so I get a lot of questions, how to build a ranking system. So first of all, I'm with Portfolio 123 since 2011, and I would say that 80 to 90% what I'm using on my traditional ranking systems comes from somebody else. So I know that, I think this is from a quant from Portfolio 123. I know that he worked endless hours and endless weeks on that ranking system. And why should I do that work again? Why should I start from scratch, right? I also know that this ranking system has out of sample, positive out of sample in other strategies, so that's another hint. The third thing is, when I'm looking at those factors and I go step by step, so whatever, consistent EPS growth, is that predictable for future for price acceleration on the stock? I would say yes. So I would go step by step through here and will basically say, hey, does it make economical sense? Does it make sense to have that in a ranking system, right? And if it does, that's fine. And I would start basically equal weighted, right? I would test that equal weighted, and then I might say, all right, sentiment is really important. I have a reasoning for it, why it should have more weight, and that's the reason why I give it a little bit more weight. So go through here with an economic sense, with an economic background. With the background, maybe you read a ton of academic papers, and that's basically how you build it, right? So when I build traditional ranking systems, I come from an assumption. I come from the assumption that, for example, consistent EPS growth is good for stocks, right? I come from the assumption that the forward earnings yield is important, right? Because it basically takes the price of the next year's earnings. What is this? No, this is current fiscal year EPS divided by price. Forward revenue, but this is current fiscal year sales divided by market cap. But it goes to estimates, which are those are a strong factor. Those are strong. Basically, the estimates are strong. Okay, so this is basically it on how coming from a design, coming from design rules, so P's bars with buy and sell rules, let the ranking system make its heavy lifting, use existing ranking systems. Okay, you can add things, you can change the weightings, that's fine, and go through the ranking system with an economic and business background to say, okay, that makes sense, and reference academic papers, basically. All right, so that would be the first step. The second step would be now, okay, I would now do sensitivity tests. And sensitivity test is not to optimize the strategy. It's basically to find out if it has a flat optimum. A flat optimum is something like where you change a parameter, but the cap curve doesn't change, doesn't break down, doesn't change its character completely. So let's just do that. So the first sensitivity test is I would basically use this one and say, all right, let's go to 200. All right. Right. Even gets better. Here it doesn't, right? But in general, nothing really bad happens, right? So this is a first good test. So next thing, let's go to 400 here. Right. Yes, it changes, right? But do you still have a positive total return? Yes, we do. So this is an okay test so far. Let's go back to 100 here. Let's change the number of stocks. So now I would say, all right, do it with 10. All right. Looks good. All right, do it with 50. Looks good, right? And you go on and on. Now you could say 100 stocks. You probably would have to change the sell rule here, but 100 stocks, 200 stocks, and it should give you a total return. It should be the cap curve should be explainable to you, and that is a good. So meaning that this strategy has a broad optimum. I can throw a lot of parameters on it, and it behaves well. So that's how I basically do the robustness tests. So another thing is you could go to small microcap focus. You could copy it and then change. Let's just do that. Let's just save it as here. Okay. Let's say video. Save. Okay. Let's weights. Equal weight distribute evenly. The only thing where I would say it should be a little bit higher should be that. Okay. Update, save. Okay, I need that one in the strategy. All right, and let's just save that again here, right? So we make a new one here. Robust 2. Save. And then I put in the new ranking system, basically. There we go. All right. Let's test it. Yeah, still looks okay, right? So that would be basically the next robustness test with 50 stocks, and I'm equal weighted on all those factors besides sentiment, right? This looks very, very well. Let's just go to, I don't know, let's go to 20 stocks here. Yeah, same thing, right? So all those factors seem to work very well, and also know it because I used those factors as features in AI factor models. Basically, they're the base. I have models with 133 features, and I have models with 179, and in both of those AI factor models, all those factors are in. and they're a very, very good base to build that. So, and they give good results. So therefore, I know, hey, this is another indication that those factors are pretty strong, right? Especially on a small cap universe that I have here. So let's take another universe here. Let's go to 30 mil. Right. Yeah, and I forgot to show the universe. I'll do that in a minute here. Right. Okay. So again, right. Now I go higher on the liquidity frontier. So I go. This is basically excludes OTC stocks. This makes sure the stocks trade below $30 million terms. Average daily total 20, basically, right? So this, you basically see that the smaller you go with the stocks, that obviously the more juice you have. But this is still stable. This is still very stable, right? Let's just see. Let's go to 20 million here. All right. Same thing. Same thing. Looks okay, right? Obviously, it looks different and than this, right? But what you want to see is basically, is the capital curve explainable? This is market impact. This is market impact. Obviously, it goes down when you have a 20% drawdown on the S&P 500, but it pops up when the market is strong again, right? And same thing here. So all that basically shows you that the factors in that ranking system, again, it comes out of the box, are giving you a very, very good start to build a system. And all those tests I just did, I didn't prepare the video, it was just spontaneous, show you that how to basically do the sensitivity test and basically to see what to expect basically from the cap curve. Let's just do one thing here. Let's just go to the S&P 500. Use a other. Let me just see. Let's go to the. No, let's go to the S&P 500. Where is it? Use a major. Here we go. Yeah, you see that? That's not too bad, is it? I mean, beating the S&P 500 on a small market cap focus, right? With where market cap is down. Let me just put that to 0 here. Let me just see what happens. Where is it? Oh, wait. Where's market cap? Here we go. All right. Update, save. Let me just see. It should get better. No, it doesn't. Huh? Interesting. Doesn't make much of a difference. All right. Let's put it in there. Update, save. All right. Let's go. Yeah, here we go. So basically, again, what we're now doing is you take a ranking system, and it's equal weighted besides sentiment, and therefore you basically see how strong sentiment is, right? It's equally weighted besides sentiment that has a heavy weight, and out of the box with 20 stocks, you're beating the S&P 500, which is not easy. I mean, obviously, we have strategies that are much better than this, but this is simply telling you that all those factors in that ranking system are giving you a very strong head start, right? So use that stuff out of the box. Use simplicity in terms of buy and sell rules, right? That is important. And let the ranking system do its the heavy lifting, and also make your sensitivity test. And if you see something like this, what we just saw in the video, you're onto something, and it's very unlikely that the strategy will not work in the future. It will be robust in the future. All right. Thank you very much, and have a great day. Thank you.